Just taking a moment, apologies. Great. All's good there. We can go ahead and get started. Margot, would you like to kick us off?
Yes, absolutely. Thank you, Matt. I'm just going to paste in the chat some information about our company and our contact details. And I am going to share my presentation. Normally, you should see it now.
Thank you very much. Margot, we can see your screen if you don't mind. Just before you start, for everyone online, I'll give a quick introduction again. Just to welcoming everyone to the Startup Tank, where top climate tech and sustainability founders pitch to leading VCs panelists looking to fund world-changing companies. We have Margot joining us today, founder of TMA, dealing with hazardous goods, as well as Dominic from Scandens, dealing with home design and construction and reparation softwares. As well as on the investor side, Carl Illies from NCA. And we were just going to get started with pitches. So Margot, whenever you're ready, thank you.
That works. Thank you very much. Gas and chemical incidents happen once every 2 days in the United States alone. They happen because gas and chemical companies do not have any visibility over their hazardous goods. And despite the humongous human and environmental impact, gas and chemical companies lose over 25 billion euros every year due to asset opacity. Because they do not know where their assets are, they lose over $5 billion worth of them, also struggle to optimize their distribution and delivery, as well as their maintenance activities. While other industries have helped cope with that kind of problem using traditional IoT devices, gas and chemical companies are left underserved because of the very nature of the goods that they deal with, hazardous goods. Traditional IoT devices uses a battery and are therefore unusable around explosive goods. They are also unhelpful to help in-house logistics and unfit for helping with compliance efforts. This is why we introduced TMA, the hazardous good companion, helping gas and chemical companies build more transparent supply chain. By relying on an IoT device specially designed to work around hazardous goods, we help these companies safely track their assets. We then rely on the data collected to help optimize delivery schedules and asset maintenance practices. We rely first on a rug pod that is specifically fitted to work on metal and in harsh condition. It is also certified to work around explosive goods and affordable, enabling safe, sustainable, and profitable sustainable supply chain. This helps optimize inventory utilization and build a path to greater profitability. This helps therefore reduce losses, prevent accidents, and optimize distribution, helping increase customer satisfaction and growth. Mostly, we help build more sustainable gas supply chain by diverting up to 1 million tons of landfill waste per year and reducing gas emission linked to wrongful transportation and gas wastage. We already have proven a market demand with leading decision makers in companies distributing gas companies throughout the world, including Linde and Total Energy. Servicing these companies help us reach a total market of over 80 billion euros, and if we focus on this market alone, we already build an obtainable market of over 4 billion euros. We do that by relying on a solution that builds strong differentiator in a low competition market. Our tag is specifically defined to help with bulk scanning, is affordable and works on metal, contrary to most other solutions available on the market today. We then rely on a long-tail scalable business model to bring our solution to the market, including either a full subscription to all our services or one-time sales of our device, coupled with an annual software subscription to our SaaS platform. At this stage, we already validated our market and signed our first LOI, enabling us to reach a first market POC by March and finally long-term larger scale deployments throughout the year. I'm Margot. I'm a serial founder and CEO of this company. I have expertise in fundraising, B2B sales, and I have built a strong network in the industry. My co-founder, Paris, has 20 years of experience developing AI, software, and machine learning solutions for big scale companies. And we are supported by machine learning expert Hendrik on the product side and Sebastian Fuesch on the market and industry side. All together working to help build the Azardis Good Companion to help gas and chemical companies build safer and more sustainable supply chain. Thank you.
Thank you very much, Margot. Great presentation. Definitely learned a lot about the space I wasn't as familiar with, and a really interesting solution for supply chain transparency. I'll hand over to Carl for any first thoughts and any questions you may have for Margot.
Yeah, Margot, thank you very much for your pitch. Very interesting stuff, actually. So what I was wondering on your device, how regularly does the data transmission work, or does it only work by scanning, or how exactly does it work?
Yeah, absolutely. So we combine both a hardware's IoT device with a SaaS platform. Regarding the hardware, it is a RFID tag, and more precisely, a passive RFID tag. How it works is it doesn't have a battery inside, it's placed on each cylinder, and we then rely on what is called a reader to actually send waves that send back information from the tag. These readers are placed strategically along all the supply chain to help this company collect the accurate data they need to actually better plan the supply chain and distribution in general.
Okay, I understand. And what's you guys's, or what are you anticipating, because you signed your first LOIs, but what are you anticipating going forward? What are the production costs of your hardware going to be, like per unit? I mean,
So we are talking about a unit that costs less than €1 to produce, actually, and we are looking for an average 20 to 25% margin on every device. If I go back quickly to the business model, we first rely on the IoT sales. So by doing 20% margin on a large scale asset base, as Equic mentioned, these companies managing from 50 to 200 million cylinders throughout their operation and supply chain, that already represents an obtainable market in customer lifetime value over 80 million per customer. By coupling it with an annual software subscription, a monthly software subscription, we can actually increase the value of our solution up to €4 per cylinder throughout a period of 3 to 5 years.
right. Is the potential customer supposed to track all of its material, or all of their gas materials or gases they want to have through your devices, or only the one that are especially hazardous?
So basically, we are talking about one type of cylinders. Today,
Okay.
there are only this type of, most of them are actually LPG, that is a mix of propane and butane. They are used by manufacturing plants as well as B2C customers for everyday operations. So actually, yes, if you want to track your supply chain, you're actually supposed to place a tag on every and each of your cylinders. That is actually the plan and the intention of the companies we are discussing with.
All right. Thank you very much. No more questions from my side.
Thank you so much, Carl and Margot. Before we go to Dominic from Scandens. Does anyone else who's joined have any questions for Margot, whether you're a startup, an investor just interested in the space? Great. Well, thank you so much. Thank you so much, Margot. And I'll invite Dominic to share their video and screen for Scandens presentation. Thank you.
Hello, everyone. You can see the screen and hear me?
Yeah, all fine.
Good. Then I need to copy text probably. Huh? Good. So now that you have my contact details, good. Then I guess I can start. Hello, everyone. I'm Dominic. I'm a co-founder at Scandens. We're an ETH spin-off, so from ETH Zurich. We're based in Zurich. We are a team of 10 people. We currently have 10 paying customers since go live last June. And our mission is to enable building decarbonization at scale. As you know, the building sector is a huge contributor to like emissions and climate change, and that's why the regulators are stepping in. Usually this is with bans and direct regulations. In the EU, for example, the least energy efficient buildings face bans, so they are not allowed to sell these properties or rent them out, and this is directly affecting 50 million buildings, or more than 50 million buildings in the EU alone. And what is happening now? So it's kind of a gold rush to offer portfolio management tools and ESG reporting tools to owners. And this is creating a red ocean. So everyone is going with the same products to the same people. But the problem is that the problem is not solved with that. So if you have an ESG management tool, and in the end, you know where you are, you maybe know where which buildings you need to tackle first. But in the end, the same thing happens like it's happening right now. The owners are taking the phone and calling consultants and service providers for actionable plans. So they're actually mandating people to do the work. And this is what we focus on. So we provide a software solution. We target like real estate service providers and consultants, and we offer them a planning software to make them fast, to make it simple and accessible, and to make it data-driven. So this is the solution that we provide with minimal data input, that these service providers, that these energy engineers are actually much more efficient to offer their services. And this is in the end how it looks like. So we are offering a web-based and a browser-based web application. We have like a precise energy modeling that we use, a digital twin, and in the end, we offer them a ready-made renovation plan that is actually feasible to implement. So we check the feasibility, whether you can, for example, drill on the property. So what is the cost? What are the subsidies available? What kind of regulations that you need to comply with? And also that, you know, what does it mean on the financial side? Can you increase your rent, for example, that you're charging? Or what does it mean on the tenant side, whether they can save also energy cost? As said, we have 10 paying customers already, some of which you can see here. Also, how are the customers using it? Usually this is in a white label solution. Here you have a cantonal bank in Switzerland that are using our tool to consult their mortgage customers and the owners of investment properties. And they provide them with a white label report that the customers can actually go to and get it implemented from the service providers. We offer that as a B2B SaaS subscription model that has a base fee and also a usage fee based on how many properties you actually tackle with it. The market is huge. So looking at EU, UK, and Switzerland, there are more than 377,000 of these customers, so real estate experts, property managers, engineers, architects, and the like, creating a market that is more than 3.5 billion big. Here you have part of our team, the 3 co-founders that you can see here. Diego, he studied at ETH, and part of his master thesis went into the software. So he was an energy consultant for more than 5 years, that he experienced these pains that you have and why actually these renovation plans are not happening, or renovations in general are not happening. Kuba, he's a building technology researcher that worked in the US, in the UK, in Switzerland, and also in Singapore. And he always knew what is available, what data is out there, and what you can do with it. And my background is like a business generalist. I was the first employee at a fintech startup here in Zurich that we then brought to Europe and later also to Mexico. We're currently in a fundraising, so we're raising 1.5 million Swiss franc, 50% of which is committed. In the past, we've already been able to attract more than 1 million in grant funding through a foundation. We have had POCs also outside of Switzerland, actually 5 POCs in Germany and in Austria, together with Swiss Life and with Ecovo. And as said, we have 10 paying customers, which generated 60K revenue so far. So to repeat, so we have 10 paying customers. We have currently a huge demand. So we have like 8 outstanding offers worth 200K. We have 5 paid POCs in Germany and in Austria with Ecovo and Swiss Life, and 50% of our round is already committed. Thank you.
Thank you very much, Dominic. Really interesting presentation, and great to learn about the integrated solution that you're offering in this space. I'll hand over to Carl for any questions or feedback.
Sure, we'll do. Yeah, thanks, Dominic. Nice to meet again. I think we've talked some time back, and I've already shot a lot of my questions back then. So let's see how many I can come up with now. But yeah, what I was also wondering, I mean, first of all, obviously, congratulations to the step you guys already made. I mean, it's great progress, really kicking it off. And actually, I didn't remember from our last talk that the market was actually this big, because obviously, if you mention you're targeting service providers and so on and so forth, I could have never imagined how many there are of those. But yeah, never mind. What I was wondering now, like in the usability of the software, right? What are the most critical data inputs, and how long does it take to draft a report and like, yeah, for instance, on a typical project?
Mm-hmm. So we work with minimal data input. So this here in Switzerland means just the address. In Germany, we need an address and the heating system to actually work and come up with a plan. What we've seen while we've validated this with customers, it helps, in addition to the address, to validate the heating system and to look at the renovation history. And the renovation history means you check like 4 different things. The renovation years, and that's the only thing that we need. The year for envelope measures such as the roof, the window, the facade, and like cellar ceiling. So the ground, if anything there has been insulated. With this, we actually get to an accuracy of 95%. So less than 5% deviation from actual consumption value. And if you compare that to a regular energy consultant that goes to do like the site visit and then does their calculations, they need to be within 5 to 13% deviation. So we're on the higher end of that, and that we can do within minutes. So it takes about 1 to 3 minutes that you have the optimal plan, and then it depends on how many plans that you want to create yourself and that you want to compare, but it's within minutes. And if you compare that to the current state, which is usually some weeks, so at least 2 weeks, you usually need to have like a first version of such a plan. And this you can now do in minutes.
Very impressive. I have to say, very impressive. Also, with the funding you're getting now, I think it was 1.5, right? What are the main goals you're trying to achieve, and how long will it last you?
Yeah, so with this 1.5 million, we're anywhere between 15 to 18 months of runway, depending on the salespeople that we hire, because most of that actually goes into the sales, a little bit of also the product extension to different markets. So we want to be in Germany mid of this year and Austria end of that year. And what we're looking for is twofold. One is market knowledge, and one is investors that know how to raise follow-on investments. And by market knowledge is really one, the real estate sector, but also like B2B and market entering in Europe in general.
All right, thank you very much. No more questions from my side.
Thanks,
Congratulations.
Carl.
Thank you very much, Carl and Dominic. One question as well that I had from your presentation, Dominic. I see that in terms of geographies, you're looking to launch throughout the DACH region. In terms of your traction so far and how you're looking to use the investment ask, what are your main target customers in terms of the people that are going to be implementing your solutions?
So it's really the any consultants. So for example, in Germany, we've already had quite some inbound, for example, with all these new energy consultant like that want to digitalize it, like Enter 42 Watt and the like, because it makes them much more efficient, and that's people that we want to work with. Then also everyone that is like an energy consultant, or also in Germany, we actually had a lot of inbound from property managers. Because usually the owners have the pressure to do something, but they just shift it on. And usually in Germany, this was the property managers that actually take the hit and need to do something about it right now.
Great. Thank you so much. Does anyone else have any other questions for Dominic? Nope. Okay. We also have, thank you so much, Dominic. We also have, of course, we have David from Fortuna Cools with us, and they're going to present as well. So welcome, David. You have the floor.
Thank you. All right. Yeah, thanks very much. Thanks to the other panelists as well. These have been great. So my name is David. I'm the co-founder and CEO of Fortuna Cools. And Fortuna really started with this mystery, which is that no one in the world likes plastic foam, and yet everyone is still using it. And they're using it at enormous scales. So this is a $80 billion market that produces over 40 million tons of material every year. And it's used in several different industries, but it's really dominated by construction and packaging. And it's used more and more every year. It is only accelerating, even though we know that this is where so much of that material ends up on the land and at sea, polluting for generations to come. And so at Fortuna, we are turning organic agricultural waste into premium, affordable insulation. And we've done this by solving one of the biggest challenges in circular economies, which is supply logistics. How do you get enough material to your factory at a low enough cost to really make a dent in the material ecosystem? And we do this by plugging directly into coconut oil mills, adding a single machine line essentially in their backyard to transform an existing waste stream into our natural insulation. And this kind of technology turns a really complex, capital expenditure heavy business, manufacturing, into a dependable and scalable, and critically, a low-cost growth model that can be easily operated by us or franchised out in new markets. So today we're already operating at a low commercial scale with 100 tons of material supply a month. And we did this by building out a model factory line in less than half a year. And we have achieved a really, really low material unit cost, which is already competitive with plastics. And this is kind of what that material ends up looking like after we use the fiber and turn it into insulation. So we started with some consumer products to achieve margins and kind of solve that cold start problem that a lot of materials companies have. And we're growing into packaging for the enormous volume that that market really provides. We've made about $250,000 of sales so far, and we launched 5 new packaging pilots just last quarter. And we're doing all this even at these early scales at about cost parity with plastic foams, as I mentioned. Oftentimes, we're even cheaper depending on the location of our customer and the location of our factories compared to some of these cheap plastics like EPS and EPE. And aside from being affordable, we are also high performance. So this was a graph from our consumer product, the Nutshell Cooler, which shows our insulation outperforming some of the standards on the market, things like the Yeti Hopper and REI and Coleman models. We're keeping ice frozen for over 48 hours using nothing but our natural coconut fiber insulation. And all this means a lot less plastic being generated and being disposed of. It means higher incomes from farmers who now get to utilize and sell what used to be a waste stream for them. And it means a lot lower CO2 emissions. And so just to dive into the emissions picture a little bit further, plastic is really one of the biggest, if not the biggest climate problem without any scalable or accelerating solution in the market today. So there are bigger sources of carbon emissions, but the world is sort of on track and the solutions are fairly set for what those solutions look like. And we're really at a scale up and optimized stage. Plastics is nowhere near that, even though the market is absolutely enormous. So plastics have been estimated to cause between 3 and 5% of CO2 emissions today. That's the entire CO2 emissions budget of the world. Plastic productions is causing a significant share of that. And the majority of those plastics are being used for packaging. This has been a problem and been known for decades, and very little progress has been made to come up with a solution. And why do we feel like the time is ripe, besides just the environmental catastrophe or imperative to do something? Well, it's because more and more companies every year are making plastic reduction pledges. The UN Global Plastics Treaty is scheduled to be ratified this year, which comes with a lot of binding bans and schemes like extended producer responsibility, which is going to make these sort of low-grade polluting plastic foams much more expensive, if not impossible, for companies to rely upon. And we're seeing consumer pressure as well. Compostable packaging and plant-based packaging are the #1 and #2 packaging preferences among consumers, and businesses are really taking note of that. So there's a ton of pressure, but of course, businesses are not willing to pay very much more for a solution, and that's where we really fit in. So our coconut fiber insulation is basically what the market has been sort of looking around waiting for a long time. It's cheap because we're using a waste material. It performs well because nature has essentially been handling our R&D for millennia, keeping the flesh of the coconut cool on the palm tree as it sort of bakes in the sun. So we're starting with a natural insulative material, and it's ready. We've been working on this for 4 years. The tech is commercialized, and we are ready to grow. So this year, we are on track to do $1 million of revenue, and we're fundraising our seed round right now to really work on growth and sales. This is the team. We started at Stanford's design school, and we've partnered with an amazing team of startup operators in Southeast Asia who have helped other startups and manufacturing companies go from scale up to growth stage companies. This is a picture from one of our manufacturing lines, and we are thrilled to have you join us to make beaches of the future look a little bit more like this. Thank you very much.
Thank you so much, David. Great presentation and really interesting climate solution that you've developed really with a post-oil economy in mind. I'll hand over to Carl first for any questions you may have.
Yeah, David, thank you very much. Just on the top of my mind, where are you guys based and where are you selling, actually?
Yeah, so we got started in the Philippines, which has been an amazing base for us to grow in a very efficient, capital efficient way. Also has a massive amount of raw material for us. So 15 billion coconuts are harvested. 90% plus of the husks are wasted every year. So it's been a great place for sort of a beachhead market. And we're expanding around Asia, which is the biggest growth market for packaging and plastics in the world. We've made a few sales in North America so far, but our model is really to be expanding manufacturing alongside sales. And so sales outside of Asia are a little bit more expensive on price and a little bit more expensive on the environmental cost side as well. And so, yeah, we're sort of focusing in our home region of Southeast and East Asia to begin with, and we'll be expanding in sort of the medium term to North America with manufacturing and sales as well.
Very interesting. And like, what's your plan in scaling? How exactly are you going to scale? Like, is it new markets? Is it new products in the consumer packaging space, or how exactly do you want to create the demand?
Yeah, we have a plan to expand into basically all of the above. So there's the most high value packaging market is pharmaceuticals, and that's a little harder nut to crack to begin with, but very lucrative and incredibly wasteful on the packaging side as well. So that's sort of the next product frontier for us. It doesn't require a huge amount of development, but it does require quite a bit of sales process is kind of the bigger barrier. So that's a big focus for us moving forward. We've just launched our first pharma customer pilot last quarter. We're expanding geographically. So Indonesia is sort of the next huge economy, huge growth economy with a lot of raw material for us next year. And then working through distributors is going to be the high leverage way for us to increase sales now that we're at commercial volumes. So we've been doing entirely direct sales so far, but using distributors to tap into smaller but very valuable markets like Singapore is a great way to increase sales, maybe sacrifice a little bit of margin, but basically enter new markets with a little bit lower effort, faster speed, and get our name out there.
Very interesting. Thanks. So speaking of margins, what has been your typical margin up until now, or where did you work up to?
Yeah, so we've achieved about 40 to 50% margins across most of our product lines. And this is a relatively recent development after we opened our commercial factory. We were much closer to break even, basically selling at our cost when we were operating at pilot scales. And it really does reinforce the fact that this is a volume-driven market. It's also the reason why it's so hard to launch a startup in this market in general, and why we had to be pretty creative in those early days. As I mentioned, our first products that were sold at any scale were actually consumer products. We had a consumer line that was sold internationally, sort of a recreational cooler, which had extremely good margins. Not a particularly scalable business, but something that really helped us get our product into people's hands, get our materials moving through factories, and prove out the performance aspect of what we're selling here, which is a really high performance insulation. And so that consumer product made our margins look good in the early days, but packaging is a very different beast. So we sort of got over that pilot hump by leaning heavily on consumer. And now with our commercial factory up and running, we're able to get those kind of 40% good material margins on packaging products today.
Very nice, impressive. Thank you.
Thank you, Carl and David, for those comments. A question from my side, David. It's a really interesting passive cooling solution, you know, made from natural materials, and with the importance of cold chains going forward, and in general decarbonizing the cooling space. It seems that there's so many possibilities for applications. I was talking to another company here also in the plastics alternatives, and like you say, between packaging and cooling and the sort. So how have you looked to prioritize those in the target markets that you've identified? Is it from what's most needed there, or what will have the most climate impact?
Yeah, you know, we don't really talk about ourselves as a climate company in the markets that we operate in, and that's, you know, that's the third or fourth or fifth priority of most of our customers, even if it helps us sort of get in the door initially. And so, yeah, we really listened to our customers and launched with a combination of what we thought were kind of the lowest hanging fruit from a product development standpoint. So, you know, something that was going to be fairly straightforward to make and do really well, competing with products that our customers were sort of like most unhappy with, which were generally like styrofoam coolers that were breaking all the time and causing a really poor customer experience, as well as a surprisingly large hit on their balance sheet because they had to replace it so much. And so, yeah, it was sort of that low-hanging fruit and listening to customers and doing some sort of back of envelope market analysis about, you know, what was going to support us in these early years. Moving forward, as I mentioned, we are being more sophisticated about opportunities in the market. That's sort of where the pharmaceutical niche comes from, because that is a more valuable sort of subsector to look at. It's just the sales cycles are more challenging. Some of the customer requirements are a little bit more demanding as well. But yeah, it's really been sort of customer driven in these early days, and working really closely with our pilot customers to kind of develop and expand into the markets that they're complaining about and looking for solutions.
Great. Thank you so much. And thanks a lot for putting your contact information in the chat as well for us to connect. Looking forward to doing that. We also have Stefano that just joined us from CEO and founder of OptimalSlope, looking at optimizing mine pit wall design. Thank you so much, Stefano. I'll let you take over.
Sure. Apologies, I think there's been an issue with the time difference. I realized that the meeting has already started. I thought actually it was early, instead I'm late. Anyway, so basically, would you like me to start with my pitch, sharing my screen?
Yes, that would be great.
Yeah, absolutely. And I guess I have 10 minutes or sort of in total, or?
Yes, we like to keep the pitches around 5 minutes, and then we have up to 10 minutes for discussion.
Sure. Okay. So and you can see now my screen without issue, right?
Yes. Good. Thank you.
Okay. So ready to go. So basically, OptimalSlope is a software for the determination of optimal profile of slopes and pit walls, so especially applied to mining. So the name already says it all in a way. Let's start from the big picture. So we increasingly need minerals for obvious reason, starting from renewables, starting from thinking about rare earth elements for iPhone, and the demand for mineral is going up. And at the moment, the mining sector is a big offender in terms of carbon emission. And our solution is something that, if implemented, we believe can bring huge benefit to the mining sector in terms of direct saving on the amount of waste rock, and in terms of emissions, direct emissions that would be saved from the mine. So the idea is to extract the same amount of mineral or more for less environmental impact. And now going into the solution itself, most mines are gigantic excavations called open pit mines, which means basically you can imagine, here there's also a photo, by the way, huge excavation where a critical element in the design of this mine is slope. Literally the slope, also called pit wall, that makes this mine. And in particular, an efficient design of slope could really make a difference. We realize that actually the current way to design these slopes is highly inefficient. So how does it work, our solution? Here you can see the sort of graphical user interface. So we get the lithology, the information on the ground, the strength of the rock. And then basically we come up with a design which looks at a different shape. Here, maybe it's a bit small, but you can see this red line corresponds to a topological optimal shape, which is different from the traditional shape, which is now at the moment used, which is planar shape. And here you can see the 3D pit. So then you can ask me a question about the detail. But what we did in order to prove our technology is to redesign mines. So here we have 4 cases of open pit mines where in blue you can see the original design. Then we come in, we redesign the pit wall according to the shape which has been determined by our software, so topological optimal, and we calculate 2 simple metrics. One is the profitability, NPV, net present value, and the increase of NPV goes from 12 to 150 million US$ per mine. And the other metric is carbon footprint emission. So on average is 600,000 tons less emission. And all of this is because basically for the same safety in terms of the slope, but because of the shape overall, the slope is steeper. And therefore there is, here you can see in green, much less excavation. There is much less waste rock. We have to excavate less. And this case study had been published in Journal of Mining Society, peer review, but also very importantly, the co-author were mining companies. So we have Kinross, Pan American Silver, and leading geotechnical consultancies. So this, I guess, gives important credibility. This is like a summary for the benefits. So the key beneficiary are obviously mining companies, so in terms of clients, but also an important is consulting engineers. So because in mining, what happens is that in a lot of projects, the mining company outsource the design to consulting engineering firms, and therefore they also would be the client of our solution. Considering the market, it's really big. So the market size for, let's say, software in the mining sector is 10 billion at present, and then has a very high also forecast in terms of growth. And what we reckon is the market we can address in terms of revenue is 1 billion a year. This is a little bit of sort of summary of our traction. So there have been a few important prizes, a large grant from Innovate UK, around £500,000. I think the most important actually is BHP, because BHP is the largest mining company in the world, and they become a customer of us. And so last year, basically, they paid us to design one of their mines in Australia. And we believe this is very important because it will allow us to leverage their satisfaction. So they say that they've saved like 50 million thanks to our design of this mine. So we want to leverage this in order to penetrate their market. Business model is very simple. In terms of revenue stream is software as a service. And in particular, the 2 main stream is to sell as a standalone product. This is why we have our graphical user interface, so we can sell directly to any customer that approaches us. But equally, we are in the process of getting partnership with two large software mining companies, data mining and RPM Global, and we've been working with them to get our product basically on their platform in order to get their large customer base, in order to acquire, the large customer base. So it's a model in terms of subscription, a yearly subscription. Our competitors here, just to say that our product is absolutely unique, but equally we are aware that obviously once people see a successful product, there will be potential competitors. So the potential competitors in the future would be either geotechnical software companies, so software company that produce software for the calculation of the stability of slopes. And here we have a key advantage in terms of the fact that our algorithm is highly sophisticated because it took several years to develop. So the advantage is really in terms of the know-how. And the other potential competitors is this larger sort of company that are for the mining, already working with the mining industry. But we think because we work in partnership with them and they don't have any geotechnical expertise, would make much more sense for them to become our partner rather than try themselves to develop a similar solution to what we bring to the market. This is a team, and so myself and the CEO, then Andrea is my co-founder. We are the owner of the company. Then we have three people working for us, and then an advisory board where there is a very experienced, the current president of our team. And so there is a mining person, let's say, a person with a geotechnical expertise and a position that we reckon to be invested, to be filled, let's say, at the end of the funding round. And yeah, maybe quickly in terms of next milestone, basically would be there are a couple of mines, I would say, where we would like by the end of the year to see the mine built according to our software. So to have like the operationalization of our design. Our design has been accepted in a lot of cases, but this would be to see mines that have been built physically according to our design. That's the main sort of target. And the target is to develop an effective integration with software company like Data Mine and RPM Global. And finish the product development because we're still developing the product thanks to this grant from Innovate UK. This is the last slide. So basically where we're looking for money is marketing, because clearly grants are nice, but with the grant you can only spend the money to develop a product. You cannot use the money for aggressive marketing. And instead what we like to use the money that for this round is marketing purposes and let's say whatever within the sort of market acquisition of customers. And with this, I open the floor for questions. Thank you.
Thank you very much, Stefano. Carl, I'll hand over to you first for any questions.
Awesome. Thank you very much. Yes, Stefano, very exciting. So what I was wondering actually, so what for the two company segments you're targeting, right? What are the specific ICPs? Like what's their job description and what do they do? What are they looking for? Are they already looking for solutions like yours, or I think for the most part maybe they already have something in part that you would wanna up from, right?
So I'm not sure when you say the two companies, which companies do you mean?
No, the two company profiles you mentioned, like first of all, it's mining companies, right? That's
yes, in terms of customers, yes. Mining companies and geotechnical consultancies, yes.
And what for the mining companies as well as for the consultancies, what is the specific persona you're trying to reach when you're selling?
Yes. So let's say technical people typically. So I would say for the mining company would be the head of the geotechnical department. Typically in every mine there is like a head, a person who is responsible for the geotechnical design. And for consultancies, similarly, there are basically they typically would be either the person who is responsible for software acquisition or the consultant who do actually the design of of the mine.
And for the mine designing software, that is basically your competition. Are they also specialized on only the mine designing, or do they do other important stuff along the supply chain as well?
Right. I mean, to be honest, I wouldn't say it's competition, because they don't have a product that does specifically the design of slopes. So typically, the design of slope at the moment basically is a manual process, and is highly inefficient because they use standard shapes, for the slope. And in a way, to be honest, I look at this mining software company as potential partners. This is why I've been talking to them, because the idea is our product is really niche, and it could be something that actually gives a solution to their customer that could give an edge on their own competitors. So let's say there are 7 big mining software companies, and we believe our pitch to them, to these two, Datamine and Global, has been, oh look, here we provide something unique that could give unique added value to your customer, because now I think the numbers speak by themselves, this big savings, in terms of the cost of mining. And so yes, I mean, I think in a way, they are more collaborators than competitors.
All right, understand. Thank you very much.
Thank you, Carl. While we're on the revenue streams page, Stefano, I just wanted to ask as well, from your traction so far and the pilots that you've set up, do you have an idea of how these would break down in terms of what you're looking to focus on in the next 2 years, whether that's the licenses, the standalone SaaS product, or consulting services?
Yeah, no, very good question. So the ultimate goal is a SaaS, so software as a service, say 50K per license per year, around that sort of target. Having said that, we realize that a few mining companies have asked us, okay, very interesting product, but maybe for the first time, can you do the design for us? So this is something we've done for BHP, something that we're going to do for another couple of mining companies. So we do consulting, but obviously you cannot scale up. So to us, the consulting is something for the short, medium term to engage and provide confidence to the mining companies. But then definitely in the longer term, the plan is purely to do SaaS.
Understood. Thank you so much, Stefano. Does anyone else have any questions for Stefano or any of the other founders we've heard from today while we wrap up? As well, Carl, if you have any final points or suggestions, but it was really great hearing these presentations on climate solutions in very different areas, even as David from Fortuna was telling us, didn't necessarily think of themselves directly as a climate company, but are doing important climate work. So yeah, opening the floor if anyone has any other questions before we sign off. No? Okay, well, I'm Mihnea. Again, I know it says Matt on the screen. I'm supporting Matt and Ford with the Climate Techies community, as well as our startup and investor relations work, the Startup Tank. So we look forward to seeing you on the next one, and I look forward to connecting with everyone on today's call. Thank you so much for joining.
Yeah,
thanks everyone.
I guess, yeah, thank you.
Take care.
Bye.